Short notes on recapitalization and bank credit. Recapitalization. So what is recapitalization? It is nothing but capital infusion to public sector banks in India. Now, what are recapitalization bonds? So these are bonds given as recapitalization for the benefit of public sector banks on which the government pays interest. Usually, there is a dose of 1.35 lakh crores normally given as recapitalization bond by the government to the banks. Some years it has already been given to that effect. Now, how does it work? How does recapitalization bonds work? The government gives recapitalization bonds, which are debt instruments which the public sector bank buy from their borrowed money or bank deposits. Government invests the funds so obtained from Reserve Bank on bank's equity, which raises the equity against debt on the bank's balance sheet. Ultimately, the bank's depositors' money is also safely held by the government until the bond matures. Now, is it public deficit accounting? While accounting for recapitalization bonds, is it public deficit accounting? According to IMF, the International Monetary Fund, recapitalization bond ought not to be added while accounting for fiscal deficit, but in India, since the government pays interest on such bonds, it is taken into account while accounting for fiscal deficit. Cash credit versus long-term loans. Usually in micro medium enterprises or MSME in India, cash credit, which is credit extended to an enterprise, is based on working capital and is the usual practice from a long time ago. So basically cash credit is basically used as credit for working capital needs of an enterprise. Whereas cash credit is working capital based, the same enterprise may take long-term loans by showing land and buildings and plant and machinery as security for availing long-term credit from banks or FI, financial institutions. In other words, cash credit is a mechanism used only for short-term needs, whereas for long-term, it is long-term loans used for project finance for infrastructure projects running for more than 5 to 10 years. So this wraps a session on short notes, recapitalization and bank credit. Thank you.